the market declining by almost 1% after 3-4 sessions of steady gains. What's the problem here?
Well, clearly you can see that the trend, we bucked the trend today, and basically we didn't think it was sustainable in the long run. The global factors are still weighing heavily on our markets, and without a doubt, it was only a matter of time before we saw a bit of a pullback. Some may attribute it to profit taking, since we've seen 5 days of gains. Some may attribute it to investors deliberately just being cautious, not wanting to drive prices higher. And basically, in my opinion, I think it's just a function of what's happening globally in the economy.
Let's talk about the impact of those global forces and the volatility on Nigeria, because we'd seen reforms that allow foreigners to buy fixed income assets, to do it without a yearly restriction, and that should have stimulated the market. But investors internationally retreating. Has that had a bearing on the fixed income side of the market?
Not really. I guess the regulators thought that if you remove the CCI one-year restriction, you would have foreigners coming to buy the fixed income assets in the country. However, when you consider where yields were at the time, at the long end, you had the 20-year yielding around about 12%, and you had at the short end, you had the 3-year FGN security yielding around about just a little below 10%. At the announcement, the local traders took advantage of it and drove yields downwards. You know, yields fell by as much as 100 basis points. With that, you didn't find a lot of foreigners coming in. When you compare Nigeria's credit rating with other countries with similar credit rating, with yields in the region of 13, 14, 15%, clearly you wouldn't expect them to come to Nigeria. Also, if you consider the effect of FX depreciation in the naira, the naira is considered overvalued in some quarters. In my opinion, you could find the naira should be trading around about 160, 165 to the dollar. Well, and with that, you would probably find that investors would shy away from fixed income. Foreign investors would shy away from fixed income.
Okay, well, let's fast forward. We're in October now, and a lot of things have changed. The international market's in some sort of turmoil, and the naira is now trading on the interbank market at 164 naira. So all these forces coming to the fore, is it going to strengthen the case for investment in Nigerian assets or not quite?
Without a doubt, there are different segments of the country requiring different attention. In the equity space, there's a lot of value to be had. In the real investment space, particularly infrastructure and real estate, there's a lot of business to be done there. Without a doubt, you would find out that these foreign direct investments are coming in. You find out that you have a lot of transactions being done in infrastructure space. In the equity space as well, we're seeing investor interest. Consider the fact that Nigeria is estimated to grow around about 8%. That's GDP growth in 2012. And the rest of the emerging market is meant to grow around about 4 or 5%. The advanced world is meant to grow around about 1 to 2%. You find out that there's a lot of growth to be seen. And obviously, when you factor that into your valuation, there's a lot of opportunity in Naira or in the Nigerian equities market. And with that, you have a lot of investors coming in. So without a doubt, we believe that there's still a lot of value to be had, particularly in the equity space.
Okay, thanks so much for your time there, David Alao.